I'm too broke to move out, and I'll never afford a house. So what's your credit score to me now? Let's max this out.
We are officially halfway through the year. How are you doing with your goals? I tell you what, I'm doing pretty good on some, not so good on others, but you know what? I still got half a year to make my goals, and I will do that. Why? Because I am going to make it happen. I'm not giving up. A lot of people give up on their goals by the time they get into mid-January. Not so. We will get there, whether it's professional or personal, definitely. Why? Because I don't give up. Not a quitter, and I hope you aren't either. Now let's get into what's going on this weekend. This weekend, 4th of July weekend, 250 years as a great nation, greatest nation on the planet. I don't care who you are. I don't care what you say. I believe it. And you know what? I see it. I see it every day in the Americans that I talk to. And I tell you, I shot 2 podcasts today. They'll air in the next 2-3 weeks. Some really, really great humans, also great Christians. Not that that is a determining factor, but you know what? It means a lot to me, and it means a lot to them having their faith, and I believe in that, and I believe in them. I believe in America. And I tell you what, 250 years, we would not be at 250 years were it not for those people who raised a hand, took the oath to serve their country. So thank you, all veterans, past, present, and future, for making America great. Because if it wasn't for your service, for your volunteer to serve, we would not be celebrating 250 years today. Now, with all that said, let's talk about the week that happened and the week ahead.
'Cause I'm too broke to move out.
There was a lot going on this week, and you know what? We had some high hopes for interest rates to continue to come down. Not so fast. That didn't happen. So prices are really, they're steady. They're not going anywhere. We're at a solid, steady market in Oahu, and we'll talk about some of the home price appreciation here. Inventory is still pretty steady. Single family homes still at a shortage. We'll get the Honolulu Board of Realtors report for the month of June next week, and then rates. Well, we'll talk about that too. Not so much on the good news there. Let's look at the headlines. Jobs report. We had a couple jobs reports that came out in the shortened work week. They were mixed. Home price appreciation up, much to the surprise of many. But yes, home price appreciation is up. Not everybody's stocks are up, but appreciation is. Why buy a home? That's a big question. Why do people buy a home? National Association of Realtors came out with a report based on a survey they did. You'll be interested to know why, and it's really no surprise. FAQ Friday. Should you make extra payments on your home? Man, that is a question I get all the time. We'll talk about that. And then VA rates, again, they end the week higher, but you know what? Hey, we're still in a pretty good range, right around 6.2%. Let's talk about ADP. The ADP jobs report, that was the second report that came out this week, but the first big report on jobs that came out this week. And private sector job growth showed 98,000 jobs in June, which was a little less than the 110,000 job expectation, a little lower than May, a little lower than April, but really there was job growth across all industries, although surprisingly, the leisure and hospitality dropped, and typically you would think that would go up. It's during the summer months and during something like a World Cup, which has taken the U.S. by storm. Go USA. Man, what a great game Wednesday. USA beating Bosnia-Herzegovina. And then pay for job shares was pretty flat, 4.4, up a little bit from 6.5 to 6.6 for job movers. Challenger job cuts report for the fourth month in a row shows that AI is the biggest culprit for job losses in the country. How much of that is true? That's hard to say, but I believe it's pretty close. JOLTS, the job opening labor turnover survey, that came out on Tuesday, and that was steady at 7.6 million, but still above the 7.3 million that was expected. So that was the first big jobs report that came out this week. Although the number of jobs was lower than expected, it was still a pretty solid jobs report. The JOLTS report being where it was also helped to cause interest rates to go higher, and that happened, again, all happened on Wednesday. On Tuesday, we also had the Case-Shiller Home Price Index report. That is the gold standard for home price appreciation across the country. And it showed that home prices were up for non-seasonally adjusted 0.8%. This is following a 0.7% month in March. And again, this is 2 months old. March and April, first 2 months of the Iran war, still showing appreciation, 1.5% appreciation over 2 months. Guess what? That's pretty solid. Actually, that's really solid in this market with interest rates as high as they are. Why? Home ownership is still the way to go for steady gains in appreciation and in equity build. Year over year, we're up 0.8%. In home price appreciation. The 20 city index is also seeing appreciation at 1.1% appreciation year over year. So overall, a very solid Case-Shiller home price appreciation report this month. We'll see what happens next month, but still, again, home ownership, really a great investment. Not short term, but long term, absolutely. Let's take a look at the BLS jobs report that came out on Thursday. Usually comes out on Friday, but hey, Friday is a holiday. It is the observed holiday during the week, so we get a 3-day weekend. June job growth, a little below expectations of 110,000, coming in at 57,000, actually almost half, so a little more than a little. And that was really following a negative revision by 74,000 for April and May new jobs. Again, we've seen this time and time again where the numbers are exaggerated when they first come out and then they come down over the course of the next 2 months. Unemployment edges down from 4.3 to 4.2%. And you would think that's actually good news for the economy, but the drop was not due to new gains in jobs. The drop in unemployment was due to people leaving the labor force. 720,000 people left the labor force in June, and that is reason why unemployment went down. Otherwise, it might have stayed the same or possibly even gone up. This report, combined with oil prices, which are still at the lowest levels we've seen since February, as far as what's going to happen next week with the Fed, it's a very good reason for the Fed not to raise the Fed funds rate. Not enough reason for them to lower. The Fed needs to see inflation come down. But with a jobs report that's a little lighter, a little weaker than expected, oil prices lower, which leads us to believe that inflation will start to come back down, there's definitely no reason for the Fed to raise the Fed funds rate. And on Thursday, that was one of the main reasons why interest rates recovered a little bit. And we'll take a look at that here in a second. The National Association of Realtors came out with their home buyer and seller generational trends report. And to me, it's no surprise. The reason why people buy a home is because they want to own their own home. Duh. 21% said this is a primary reason why they want to own their home or buy a home. They want something that they can call their own. Nobody wants to live with their parents forever. Although I did hear a song by, I forget who it was, but it's called Credit Card. And basically, but it's interesting, it's by probably a Gen Z person, and she is basically saying, hey, you know what? I'm never going to own my own home. Why do I even have a good credit score? Let's max this thing out.
Cause I'm too broke to move out, and I'll never afford a house. So what's a credit score to me now? Let's max this out.
I was listening to this when I was coming home from surfing today with my son, and immediately I'm like, God, that sucks. But you know what? For some people, they may feel that way, which is no good. But really, ultimately, I think we all want to have something that we can call our own. 16% said they bought a home because they want to be closer to family and friends. Tell you what, in the military, it's very tough to do that because we're always moving around. But I believe that certainly people who are moving from Hawaii to the mainland because they can't afford a home, you know what? If they'd be back here, 6 days a week and twice on Sundays if they could afford to buy a home in Hawaii. But you know what? Unfortunately, And not only is it unaffordable, there just aren't enough homes. 10% are buying because they want a larger home. These are people who are moving up. 8% who are buying, they want a smaller home. Those are probably the boomers, the Gen Xers who are downsizing now that they're empty nesting. That ain't me, folks. I mean, I'm Gen X, not a boomer, although my son calls me that. But I'm in the perfect size home. I'm never moving. I'm happy here. But these are the primary reasons why people are buying homes. Pretty interesting. It makes sense to me. This FAQ, man, this is a good question. I get this question a lot. Does making extra mortgage payments really make a difference? Well, I will tell you this, yes, it does. If you make the equivalent of one extra mortgage payment a year, every year for the life of the loan, you will knock 5 to 7 years off of your loan life. So instead of having a 30-year mortgage, you're gonna have a 25 to 23-year mortgage. That's pretty good, but you know what? Most people don't pay a mortgage for 30 years anyway. Most people sell their home after 10 years. It's about the max, but typically people are gonna sell right around the 6-year mark. For me, I personally, unless you know you're gonna stay in the home long term or you have a high interest rate, I typically don't recommend paying more towards your mortgage. And the reason for that, why do that when you could put that money into an investment like an IRA or a Roth IRA that is going to make you more money? If you have a low mortgage rate, if you have a mortgage rate that's less than 4%, do not make extra payments, because you could make more money by putting that money into a high yield savings account, investing in municipal bonds, and have better tax benefits than if you put that money into your home. And remember, when you put your money into your home, not a bad thing, but you're building equity quicker. That money is not a liquid asset anymore for you. When you put it into a high yield savings account, it is still a liquid asset. It's something that you could use if you need to. But when you put it into a home, you know what? Man, it makes it more difficult to use that money. So if you have a high interest rate, if you know you're gonna live in a home for 30 years, yeah, pretty good. One extra payment a year is awesome, and that will help you pay that mortgage off sooner. But again, most people are gonna sell their home certainly before 30 years. They're not gonna, I don't know too many people who have paid off their mortgage over a 30-year period. Most people sell or they refinance and then use some of that debt. But personally, I think investing in your home is a better option for most people. And you know what? That's why you need to talk to your mortgage advisor. You need to talk to your financial advisor. And most people are like, I don't know if I should talk to my financial advisor. My financial advisor is going to tell me to invest that money. Talk to the loan officer. What do I got? If you make more money, pay more money on your mortgage, does that help me? No, it helps you. If you tell your loan officer ain't making money when you pay your mortgage off sooner. Your financial advisor certainly makes money when you invest. I'm that third party, not really in the game with your money, in the sense that I don't make any money by you investing or paying off your mortgage. So I'm not a disinterested person, but I can help you make that decision. Your loan officer should be your loan advisor, your mortgage advisor, to help you make the right decision. Again, not going to say it's not for everybody. Sometimes it is, but for many people, it is not the best option to make extra payments on their mortgage. Now let's talk about rates. Man, I tell you what, we are 6.12, I think, as we started the week. Man, Tuesday, Wednesday was not good for interest rates. You can see we popped above 6.2. Thursday, we came down a little bit, not a lot. End of the week, right around that 6.2 range for VA rates. So not bad, 6.5 to 6.75 for conventional. Next week is Fed week. I don't think there are going to be any surprises. I think the biggest surprise will be, what does Fed Chair Warsh say after the meeting, because he's going to get up and he's going to talk. And again, he's trying not to really drive the market with what the Fed says. He wants the market to be driven by the numbers, not by him standing on a stage and pontificating. So it'll be interesting to see. No fireworks expected. Hey, you know what? Enjoy your fireworks this weekend. Celebrate safe, celebrate smart, have a great time, and God bless America.